Welcome to the PAI Morning Briefing. I'm your host from PantheonAI, and today is March 21st, 2025. Good morning, everyone. Today we have quite a bit to unpack, so let's dive right into the markets. I always say if you're going to trade or invest, you've got to be tuned into the pulse of these numbers. And speaking of pulses, our major U.S. indexes are showing mixed results today.
Let's start with the S&P 500. It closed at roughly 5,617.72, experiencing a slight dip of about minus 0.23%. Not a major swing, but it does hint at some underlying jitter in the market. The Dow Jones, our venerable barometer of industrial strength, ended at around 41,539, dropping about minus 0.53%. And then there's the NASDAQ, which is riding a bit higher today at approximately 17,570.23, with an increase of around plus 0.28%. The Russell 2000 posted a bit of a down day as well, closing near 2,044.42, down about minus 0.65%.
Now let's take a brief look at our digital currencies, Bitcoin and Ethereum. Bitcoin is priced around 83,902.4, down roughly minus 0.32%, while Ethereum sits near 1,946.4, having lost about minus 1.8%. So although our traditional indexes are navigating through minor turbulence, our crypto markets are experiencing a slightly more pronounced correction, particularly on the Ethereum front.
I like to think of these numbers as the heartbeat of the market. They give us a snapshot of investor sentiment. And speaking of sentiment, there are several trends shaking the news today that I believe you're going to find both riveting and enlightening.
Now let's take a deeper dive into some major market trends that are drawing investor attention this morning. One of the hottest topics is the shifting landscape in big tech. Microsoft, which once stood at the forefront of the generative artificial intelligence revolution, is now facing a bit of turbulence. There's an interesting piece out there titled, How Microsoft Went from Generative AI Leader to Laggard and What to Do with the Stock. It appears that the blue chip has been struggling to avoid its longest weekly losing streak since 2008. For those of you holding Microsoft stock in your portfolios, you might be wondering what this means for the company's future in artificial intelligence innovation. It's a classic tale of leadership position versus market expectations. When a company is as widely anticipated as Microsoft, even a slight dip can trigger a natural sense of impatience among investors.
It begs the question, how much of this is a temporary setback, and how much indicates a longer-term challenge in adapting to new technological frontiers?
Meanwhile, we have our favorite stock market pundit, Jim Cramer, weighing in again with his top 10 things to watch in the stock market this Friday. His pieces have always been a mix of insightful analysis and that trademark energy, and today is no different. He pointed out that Wall Street was heading for a lower open, with the NASDAQ already showing a down week and the S&P 500 on the proverbial bubble. Jim Cramer tends to bring a bit of humor and a rapid-fire pace to his observations, reminding us all that sometimes the market can be as unpredictable as your uncle's jokes at family gatherings. And speaking of jokes, if the stock market were a comedian, sometimes it delivers punchlines that can leave you both laughing and scratching your head.
On the policy front, Chicago Fed President Goolsbee has caught investors' attention by hinting at potential rate cuts, depending on how inflation evolves. In his conversation with CNBC, he mentioned that more concerns have been voiced by businesses regarding tariffs and inflation, indicating that policymakers might adjust the course if inflation seems to be easing. This is significant, as any shifts in the Federal Reserve's stance could have wide-reaching ramifications for everything from borrowing costs to overall market liquidity. It's a reminder that monetary policy decisions, though sometimes overshadowed by corporate headlines, play a crucial role in shaping market dynamics.
Switching gears to corporate actions, there are a couple of significant deals that have captured the market's eye today. First, Better Choice Company, a pet health and wellness player, received overwhelming approval from its shareholders for the acquisition of SRx Health Solutions. Now, anytime you see a pet-oriented company stepping up its game, it often makes me think of how even the most niche sectors are embracing the merger and acquisition trend. Pet health is not just about keeping our furry friends healthy, it's about capitalizing on a growing market segment with loyal consumers. With investor appetite for niche markets at an all-time high, this acquisition highlights how companies are pivoting to tap into rising trends.
Not to be outdone by Better Choice, we also have some interesting moves on the international front. Alfa Laval is in the process of acquiring the cryogenics business from French Group 5s for an all-cash deal valued at roughly 800 million euros. Now, although that sum might sound astronomical, in the grand scheme of multinational deals, it's a calculated risk meant to bolster cooling and cryogenic solutions across industries. The strategic rationale is clear. As industries sporadically demand new technologies to manage resource and energy efficiencies, companies such as Alfa Laval are positioning themselves to serve as key suppliers in advanced technologies.
In a similarly intriguing development run out of New York, Equiniti has taken steps to expand its investor and public relations platform by acquiring Notified, which positions it as a global leader in those domains. This move indicates that the firm is not just content with standard investor relations. Instead, it's turbocharging its engagement with shareholders and the public. This kind of consolidation in the PR and IR sphere might be seen as a microcosm of broader trends towards digital and data-driven communication in corporate governance.
And speaking of acquisitions, Redwire Corporation has received all necessary regulatory approvals for its acquisition of Edge Autonomy. This deal underscores the dynamic nature of the space infrastructure sector, a sector that is rapidly evolving along with our ambitions for a next-generation space economy. With countries and companies investing billions into space infrastructure, deals like these remind us that the final frontier isn't just about exploration. It's also a thriving space for investment, innovation, and occasionally intergalactic humor. I sometimes wonder if the universe had a stock market, would aliens trade in dark matter futures?
Not forgetting the energy sector, Energene's recent decision to end its deal with the Carlyle Group for assets in Egypt, Italy, and Croatia is another interesting storyline for today's briefing. While Energene's move might have left some investors with a few sleepless nights, it's important to remember that reassessing a major deal in light of evolving market conditions is often a prudent, if dramatic, strategy. It makes you think about how volatile global energy markets can be. After all, if the price of oil is the original roller coaster ride, navigating these deals can sometimes feel like the wildest ride at the amusement park.
While we're on the subject of global movements, let's turn our attention to Canada. There's been an update on new housing prices in Canada for February, with prices now showing a modest increase of plus 0.1%. This comes in contrast to a prior decline of minus 0.1%, signaling a potential stabilization in the housing sector. Even though this is a relatively small change, given that the Canadian housing market is often a bellwether for broader economic sentiment in the region, it's worth a closer look. Additionally, the USD per CAD exchange rate has also been on the move, tracking higher today to around 1.4356, up by 33 pips. It's subtle shifts like these that sometimes create big ripples in trade and investor perceptions over time.
Now that we've covered a wide array of headlines, let's transition to our detailed sector analysis for today, starting with technology, energy, and finance, as those seem to be the domains setting the stage for both domestic and international developments.
In the technology sector, the mixed performance of tech giants is drawing plenty of attention. Microsoft's transition from a generative AI leader to what some are now calling a laggard is causing quite a stir. With emerging competitors rapidly evolving and innovation cycles speeding up, even a company as mighty as Microsoft isn't immune to the pressures of changing market dynamics. Analysts are questioning whether the current stall represents a temporary setback or a more fundamental shift in strategy. There's a lot of speculation here. Has Microsoft lost its innovative edge, or is it simply playing the long game and recalibrating its approach to meet new expectations? For investors, it's a classic scenario of risk versus reward. Do you stay the course with a historically strong player, or do you pivot to emerging opportunities in the burgeoning artificial intelligence space? It's a debate as lively as any we've seen in the tech forums online.
Then we have Equiniti's acquisition of Notified. This initiative isn't just about consolidating the investor relations landscape, it's about setting a new benchmark for how companies will communicate with their shareholders moving forward. It's a space where trust, transparency, and technology converge, and investments in these areas are seen as long-term bets on corporate governance efficiency.
In the energy sector, Energene's retraction from its deal with the Carlyle Group might be interpreted as a signal of heightened caution among oil and gas operators amid geopolitical uncertainties and price volatility. With energy prices often buffeted by external influences such as global conflicts, supply chain issues, and regulatory changes, the decision by Energene to reevaluate its strategy could be a microcosm of a broader industry trend towards more conservative, calculated investments. Investors in energy stocks will be keeping a close eye on such moves as they signal broader market sentiment in the sector, pushing many to ask, will this cautious stance become more widespread, or will energy companies revert to more aggressive strategies once conditions stabilize?
In the finance space, nothing captures the zeitgeist quite like discussions about monetary policy. Chicago Fed President Goolsby's remarks on the potential for rate cuts once inflation shows sustained progress have stoked interest among market participants. Many experts are now speculating on the timeline and scale of any future policy changes, a discussion that reverberates across banking, real estate, and even the ever-volatile stock indices. As businesses continue to voice their concerns regarding tariff impacts and inflation, investors find themselves at the crossroads of fiscal caution and opportunistic ambition. Is it time to recalibrate portfolios in anticipation of a more accommodating monetary landscape? Or should one remain the course and trust in the long-term resilience of our financial systems? These are questions that have been on the minds of many veteran traders and new market entrants alike.
Taking a step back, let's talk about the global implications of these diverse stories. If you look at the broader picture, the interplay between technology, policy, and corporate restructuring is not confined to the U.S. market. Across continents, similar themes are emerging. In Europe, regulators are watching the consolidation moves with keen interest, particularly as companies like Alfa Laval expand their technological footprint with significant acquisitions. Meanwhile, in Asia, investors are bracing for potential ripple effects from policy changes worldwide, especially when it comes to artificial intelligence and digital communications.
The international stage, therefore, becomes a dynamic theater for many of these narratives, whether it's a multinational company reshaping its portfolio through strategic acquisitions or central banks hinting at subtle policy shifts, a nod to how interconnected our global markets have become. For instance, even the seemingly modest change in Canada's housing prices reverberates in investor conversations across borders, highlighting an emerging consensus that small economic indicators can often predict larger trends.
Let's circle back to the U.S. market now, where the conversation tends to be most vibrant. The recurring themes we're noticing include the balancing act between optimism in technological innovation and caution amid economic headwinds. There's a clear undercurrent of uncertainty stemming from everything from global energy discussions to domestic inflationary pressures that keeps investors on their toes. But if there's one thing I love about the market, it's that it always throws us a curveball. Just when we think we have it all figured out, something new emerges to keep the discussion lively. And if you're anything like me, you appreciate that unpredictability, even if it means double-checking your positions now and then.
Now, let's dive deeper into the comprehensive coverage of today's headlines, touching on about 10 to 12 important stories that are making waves.
First up, the saga of Microsoft continues to be a hot topic. The narrative around its transition from generative AI pioneer to what some commentators label as a laggard is captivating not only because of the company's past dominance, but also because it shines a light on the broader evolution of the tech industry. With investors worried over the durability of Microsoft's competitive advantage, the stock's attempt to avoid that dreaded prolonged losing streak has been a central focus in many market analyses. If you hold Microsoft shares, it might be time to have a long, hearty discussion with your financial advisor about the next steps.
Next, Jim Cramer's top 10 things to watch in the stock market this Friday have sparked several conversations online, particularly his cautionary note on the Nasdaq and the S&P 500. Jim has a knack for zeroing in on the most important details, making his list both an alarm bell and a roadmap for the day ahead. His dual observations cautioning about a lower open while recognizing the inherent volatility remind us that it's all about balance. It makes you wonder, are we merely witnessing a momentary downturn, or is this a harbinger of more sustained volatility in the weeks to come?
Following this, we have Chicago Fed President Goolsby's remarks on potential rate cuts in the offing if inflation continues to cool. Even though his comments may seem like just another piece of economic chatter, they carry significant weight. His indication that more businesses are voicing concerns about tariffs and inflation casts a spotlight on the precarious balancing act faced by policymakers. This move is crucial for investors to watch because a shift in monetary policy can be just as transformative as a corporate merger or acquisition.
Speaking of acquisitions, Better Choice Company's recent shareholder vote in favor of an acquisition deal with SRx Health Solutions is another significant development. In a market where niche sectors like pet health are becoming increasingly valued, this decision underscores the importance of strategic acquisitions in diversifying revenue streams. With Better Choice Company actively pursuing growth in a robust but competitive segment, investors are encouraged to keep an eye on how this deal impacts the broader pet health and wellness market.
Then there is Alfa Laval's strategic move to acquire the cryogenics business from French Group 5s. An all-cash deal worth €800 million might seem like small change in today's market, But for Alfa Laval, it represents a pivotal step in reinforcing its position in an industry that is essential for efficient resource management. The deal is anticipated to enhance the company's technological prowess and operational capacity, a development that investors in the industrial sector should watch closely.
On another international note, the news from New York regarding Equinity's acquisition of Notified brings fresh energy to the PR and investor relations space. This strategic consolidation could very well reshape the way companies interact with their stakeholders globally. It's an intriguing reminder that, in today's digital age, how you communicate can sometimes be just as important as what you produce.
In yet another sector, we've seen Energene end its deal with the Carlyle Group for its Egypt, Italy, and Croatia assets. While the news was somewhat subdued, it has ignited debates on the volatility of global energy asset deals. When deals fall apart or are reconfigured, the implications extend beyond the immediate companies involved to affect investor sentiment across the board. It poses critical questions about risk management in the energy sector, especially in times of global uncertainty.
As if that wasn't enough, Redwire Corporation's clearance to finalize its acquisition of Edge Autonomy further underlines the momentum in the space industry. This deal is not just significant for Redwire, it signals a broader trend where space infrastructure and autonomy are being prioritized as key growth drivers. In an era where private companies are reaching for the stars, investments like these remind us that space is no longer a domain solely for government agencies.
And to round off our headline recap, we have an update from Canada. February's new housing prices have risen by plus 0.1%, a small but telling reversal from the previous minus 0.1%, all occurring as the USD and CAD exchange rate sees minor fluctuations. It's a classic reminder that even incremental shifts in domestic markets can create ripple effects worth paying attention to internationally.
Moving on from these stories, let's now turn our focus to some detailed sector analysis. In our technology sector, the recurring theme is adapting to rapid changes. Microsoft's tribulations in navigating the challenging terrain of generative artificial intelligence are not isolated. They exemplify a broader pattern where established tech giants must now innovate faster than ever before. As emerging players in the AI space push boundaries, legacy systems and mindsets are being tested. Investors might ask themselves, is this a temporary stumble for Microsoft or a sign that the company's strategy needs a bold new vision? With every crisis comes a chance for reinvention, and it will be fascinating to watch how Microsoft adapts in the coming quarters.
In the energy sector, the mood is more cautious. Energene's decision to step back from its previous deal underscores a broader skepticism in the global energy market. With volatility in oil prices and concerns over geopolitical tensions, many energy companies are playing it safe. This conservatism might translate to slower growth in the short term, but it could keep companies more resilient in the long run. It's a bit like saving your best moves for when the stakes are really high. Only time will tell if the market rewards this prudence.
Over in finance, the conversation about interest rates and inflation is intensifying. President Goolsby's signals regarding potential rate cuts are being closely monitored by banks, institutional investors, and even individual traders. The possibility of a more accommodative monetary policy could spur borrowing, stimulate growth, and lead to a reevaluation of asset prices across the board. Yet it also raises questions about fiscal responsibility and the long-term impact of such measures on financial stability. Are we on the verge of a renaissance in low-rate investing, or are caution and regulation about to tighten the reins again? These are questions that keep our nightly news cycles buzzing with debate.
Now, let's widen our perspective and consider global market implications. Many of today's stories are not confined to domestic boundaries. Take, for instance, the acquisitions by Alfa Laval and Equinity. These moves hint at a wave of cross-border consolidation that could redefine global supply chains and investor communications. In this interconnected economy, a strategic decision in Europe might just have a domino effect in Asia and the Americas. It prompts us to consider how interconnected financial markets truly are. How might these international deals set the stage for new alliances, and what impact could they have on global trade agreements and long-term economic stability?
Adding another layer to our global view, the comments from Chicago Fed President Goolsby have resonated far beyond U.S. borders. Emerging markets, particularly in Asia and Latin America, watch closely as they calibrate their own monetary strategies. With inflation being a universal challenge, the insights shared from the Chicago Fed can serve as an early indicator for other central banks contemplating similar policy adjustments. It's a reminder that in the world of economics, one policy shift in one region can sometimes trigger a cascade of reactions around the globe.
As we wind down today's briefing, let's talk about some expert insights and predictions. I've been chatting with several colleagues over the past few days, and there's an emerging consensus that while short-term volatility might persist, the long-term outlook remains cautiously optimistic. In the technology sector, for instance, I hear a number of experts saying that while Microsoft is facing challenges now, the renewed focus on AI innovation might yield significant breakthroughs once the dust settles. Similarly, in energy, there's speculation that the current conservative approach might position companies like Energen to capitalize on market recoveries in the near future. And of course, in finance, the potential for a strategic shift in monetary policy is one of those classic scenarios where short-term caution blends with long-term opportunity.
I can't help but inject a bit of humor here. If the market were a movie, it might be titled The Plot Twist. Just when you think you've got the storyline figured out, another subplot emerges. It's that unpredictability that keeps things exciting for all of us, don't you think? And speaking of plot twists, it makes me wonder, have you ever experienced an unexpected market turn that completely altered your investment strategy? I'd love to hear about it, so feel free to reach out and share your stories. After all, every investor's journey is unique, and sometimes a good laugh over a market twist is the best lesson of all.
Before we wrap up, here are a few thought-provoking questions for you, our discerning audience. How do you view the delicate balance between technology innovation and traditional market strengths? Are these short-term dips in our major indexes a sign of deeper structural shifts, or merely natural fluctuations in an ever-adapting system? And with interest rates possibly on the cusp of change, what strategies are you considering for hedging risk in your portfolios? Take a moment to reflect on these questions. Each one could lead to a pivotal rethinking of your market positions.
As we conclude today's briefing, let's revisit some of our key takeaways. The market started off with mixed signals from major indexes and cryptocurrencies, hinting at cautious sentiment among investors. Major players like Microsoft are facing strategic crossroads, while influential voices like Jim Cramer provide both guidance and a few laughs amid mounting volatility. On the policy front, the potential for further rate cuts looms, and we've seen several international acquisitions that signal a trend toward consolidation in various sectors. Whether you're invested in tech, energy, or finance, the interconnected nature of global markets underscores the importance of staying informed.
I want to give a special shout out to PantheonAI for being your information co-pilot on this journey. We're here to help you navigate the complex maze of market data, news, and expert insights, all so you can make well-informed decisions in an ever-changing landscape. And remember, if you ever have questions or need further clarification, you can always ask questions to our AI co-pilot.
Before signing off, let me leave you with one last nugget of wisdom. Learning shouldn't feel like a full-time job. Instead, let it be an engaging part of your day, much like tuning in to this briefing and having a friendly conversation about the market.
Thank you for joining me this morning. I hope you found today's discussion both informative and thought-provoking. Remember to come back for the next episode tomorrow when we'll continue to unravel the trends and insights shaping the financial world. Until then, keep questioning, stay curious, and happy investing.